Well, hello and welcome to this edition of Morning Trade. You're watching Moneycontrol live feed and I'm Nandita Khemka. Over the next 30 minutes, we'll be talking about the cues for trade, the big earnings to watch out for today, and of course, the stock in focus will be Vedant Fashions as promoters look to offload stake in the company. We'll be talking about that in a bit, and if you have any stock-related queries, send them in to us on our live feed and we'll have them addressed by our technical expert on the show. But before we do all that, let's take a look at the top stories at this hour. Wall Street stages a rebound with key indices gaining over 1% as House Speaker Kevin McCarthy drops hints of a possible deal on raising the US debt ceiling by the end of the week. Asian markets meanwhile trade higher while the SGX Nifty is indicating a positive start for the Indian markets. Oil prices surge on hopes of a deal on raising the US debt ceiling. Projections of higher global demand in the second half of 2024 also boost prices. Meanwhile, hawkish comments coming in from Fed officials amid a rising dollar pushes gold prices below that $2,000 an ounce mark. Big earnings to watch out for today. SBI is likely to deliver its best interest income growth in over 20 quarters. Also watch out for ITC as the street anticipates double-digit growth in its cigarette volumes and the FMCG business as well. Stocks in focus today, M&M Forgings, Railtel will react to fourth quarter earnings while Vedant Fashions promoters are looking to sell nearly 10% stake via an offer for sale. We discuss all these stocks and a lot more on the show. Well, let's bring on board then our technical expert for today, Nirav Chheda of Nirmal Bang is joining in this morning. Good morning, Nirmal. In fact, Nirav, good to have you on the show. Well, the levels to watch out for on the index today, according to the pivot charts, is 18,128. That's an important support level to watch out for on the Nifty. But this morning, SGX Nifty is giving out positive signals where the Nifty is concerned. So, would you expect the markets to come out of the downside that we have seen over the last couple of sessions and reclaim levels of 18,250 or thereabouts?
Oh, yes. Hi, Nandita. Good morning. Looking at the index, it has fallen from 19,000 to about 16,800 in this recent fall, and now it is reversing. So that retracement is taking shape. It is above that 61.8% retracement, and in between 78% and 61.8% of the whole fall. So 18,500, 550 is an important resistance, which is also the 78% retracement, and that 61.8% retracement is around 18,180 or 18,150 odd. There are a host of supports now placed for Nifty around that 18,150 to about 18,000 levels, with 18,000 strike put holding the highest open interest base amongst puts. So all in all, we will see some good support coming in from 18,200 up till 18,000 levels. I do expect a bounce in Nifty from current levels, and it should again regain its strength and move towards that 18,500, 550 odd level. So, buying on dips is the best strategy as of now for the market going forward. Next couple of days, I expect 18,120 to hold. So that should be your stop loss. And, you can expect a target to be around 18,400, 450 odd.
Right, those are the levels to watch out for on the Nifty. But let's also talk about the stock of the day. According to me, it will be SBI as it reports its fourth quarter earnings today. Profit is seen growing somewhere around 65.5%. In fact, when it comes to net interest income growth, it is expected to hand in its best interest income growth over the last 20 quarters. NII is expected to rise 26% on a YOY basis. Margins are likely to be stable, and asset quality is also likely to improve. Kotak, in fact, institutional expects slippages of somewhere around 1.5% of loans, which comes to roughly around 11,500 crores or thereabouts. What is your own view on SBI? We are also getting in some queries on our feed. Vibhash Kumar wants to know about this stock and, the stop losses and targets on the stock going forward. When you look at the stock, it has underperformed the Bank Nifty on a YTD basis. So what are the levels that you'll be watching out for on this counter, and how should one play this counter before and after the earnings?
Yeah. So, for the longest time, this stock was in consolidation in between that 520 on the upside and about 400 on the downside. That had been broken. Now, during this recent fall in Nifty, those breakout levels have been retested for SBI. and which is a good sign, and post that, good reversal has come in, as you can see. I believe this stock on the longer term charts is still making a higher top, higher bottom formation, which is a very, very positive formation. And whatever the results, this stock should perform. So remain on the long side. It has got a recent breakout of around 560 odd, and it should remain above this level for the next few days. In fact, a few weeks as well. It should now move towards its eventual top, which is around that 620, 625 odd levels. Break it and go towards that 680, 700 band. So I'm bullish on SBI. You can go ahead and buy at current levels, buy some on dips. You can keep a stop loss of around 560 for your longs, and expect the first target to be 625 and the eventual targets as 680 and 700.
Right, so those are the targets to watch out for in SBI. Hope that answers your query. Let's also talk about some of these QSR stocks. Most of these companies reported their earnings yesterday. Jubilant Food earnings came out, weren't really, anything to be happy about, given the fact that there was a lot of pressure on margins in the wake of higher input costs. But, street verdict on the stock has come in this morning. UBS maintains a buy rating on the stock with a target of 600 rupees per share. It believes that weak demand continued in Q4 FY23 and near-term pain on demand and margins is likely to continue. Long-term growth potential for this stock remains intact, according to UBS, and it believes that the new brands will support growth going forward. When it comes to Morgan Stanley, even this brokerage has an overweight rating on the stock with a target price of 560 rupees or thereabouts. Q4, it says, was a miss on margins, but it was better compared to peers like Devyani International. But CLSA has a bearish call on the stock. It has a sell rating with a target price of 460 rupees or thereabouts. It says that demand remains soft. Operating margins have seen a sharp decline. In fact, margins are now at the lowest in 11 quarters, and the near-term environment is expected to remain challenging. So, when you look at Jubilant Foods, even though numbers weren't all that great, the stock rallied somewhere around 4% yesterday. Is it time to look at some of these stocks now, or should one stay away from these?
Yep. See, particularly for Jubilant Food, the overall trend is still negative. Even though it has come up, the overall trend of lower top, lower bottom formation on the weekly is still negative. There are still shorts in the system, which need to be covered, and it needs to break out above its 500 levels for a new trend to start. Having said that, I don't think a new trend will start very soon. Still, some part of consolidation is left. So, in case you bought it at lower levels, around that 480 to 500 level, this is where you exit your positions and wait for some more consolidation or a breakout of around 500 levels on a weekly closing basis, and only then try and enter this stock. Once that breakout comes in, this stock can go up very aggressively, but I don't see the volumes turning up, and unless there is a volume support for a particular stock on the downward side, the stock generally doesn't perform that great. So it's better to exit at this point of time.
Right, so that's a view on Jubilant Food. Nirav, hold that thought. We'll come back to you and discuss more stocks in details. But let me also get on board my colleague Mangalam Maloo, who has been tracking the FMCG space for quite some time. ITC is reporting its numbers today. Let's go across to him and discuss what we need to expect from ITC this time around. Double-digit PAT growth expected, Mangalam?
Double-digit PAT growth expected, but this time around, let's set the stage for ITC first. It's been a stock which has been a phenomenal outperformer in the last 1 year, after underperforming for the last many years. When the outperformance started, a lot of people on the street weren't expecting ITC to go great guns. But now, after a big move, almost 70% in the last 1 year, people are expecting ITC to do even better. So, a lot of the good results expectations are perhaps in the price and in the expectations of people as well. Having said that, the stock trades at 26 times 1 year forward earnings. It is cheaper compared to all the other FMCG players, but it is a little more expensive compared to its own historic mean valuations, which were close to around 22, 23 times. When the stock started rallying, it was trading at around 12 to 13 times. So, of course, you can't expect the stock to give the same sort of outperformance in the next 1 year as it has in the last 1 year. So, with that stage set, here's what to expect. 12 to 13% growth in the cigarette volumes. Now, here's the number that the ITC company will never give. It's basically analyst estimates.
Right.
Most on the street are anticipating, that the cigarette realization growth would be anywhere between 2 to 3%. So if the cigarette revenue growth is 15 to 16%, that means volume growth would be 12 to 13%. How do you infer whether the volumes have grown or not? You also look at the operational performance of cigarettes.
Right.
If the growth is volume led, then you see an improvement in the EBIT or the operating profit as well. 13 to 15% jump is what we're anticipating out there. That's a large part of their business. Secondly, the FMCG others, which is now becoming increasingly as huge as the cigarette business in terms of its revenue contribution. There we're expecting a 15 to 16% growth, and there are multiple factors for that. They've grown their distribution, they've grown their product array, and over the last few years or so, they've increased their product portfolio and reach as well. So 15 to 16% growth is what one's anticipating there. The other segments. So far, hotel business has been doing well. We've seen that in the numbers of Indian hotels, we've seen that in the number of chalet hotels, all Lemon Tree, all of them have reported extremely strong set. So here as well, no surprises if the company goes ahead and shows 40 to 50% revenue growth. Agri-business will see a decline of around 12 to 15%. That's because of a high base. And secondly, same time last year, wheat exports were allowed. This time, wheat exports aren't allowed. So that will impact their business out there. So 12 to 15% revenue dip is what you're witnessing. And the paper business out there, it has been growing at a phenomenal pace over the last few quarters. Now that pace will slow down. So we're expecting 0 to 5% growth out there. So put all these things together, 5.5% jump on the company's standalone revenue, 16,400 crore thereabout is what the street is anticipating. The operational performance will be important. 19% jump in the EBIT is what we're witnessing. Closer to 40%, 38% margins, street would like that. And the net profit growth of around 18%. Like you said, double-digit growth is what the street is anticipating. 4925 crores. So three numbers to remember: 16,380 on the top line, 6235 on the EBITDA, and 4925 on the bottom line is what the street is anticipating.
Right. Anything by way of management commentary that you'll be watching out for when it comes to ITC? Because you've given us a whole perspective of what to expect from the entire business per se, because it's a conglomerate which has various businesses, right? So you've given us a whole view of what to expect. But anything by way of commentary, outlook, future outlook that you'll be watching out for?
I'll watch out for two Ds on ITC. The first D is demand, what they foresee demand to be. And the second D, which is a distant demand from the street, is any word on demerger. I don't think it is happening. I don't think it will be announced. Even if it does, it doesn't come post results or anything of that sort. But if there is a word on that, because the hotel business over the last 1 year or so, the management has been reiterating that the demerger of that business is back on the table. The IT business is a separate entity already. It's a demerged entity, but are they going to list it separately or not is the big question. So those are a couple of things that could be, the near-term triggers after a big move that we've seen. But steady, stable numbers, you will see the stock do well. Not so good numbers, the stock will still do okay.
Yeah, I think it has come out of that 400, in fact, managed to top that 400 mark after a long time. So we're all happy about that. But since you're here, one last question I want to throw to you about the QSR space. Since all these companies reported earnings yesterday, Jubilant saw margin erosion. The like-for-like growth was within the expected range, but nothing great. But still, the stock saw a 4% rally yesterday.
So it's a bunch of things that happened, I would presume that after a big decline that the stock has seen, it's corrected about 50% from its all-time highs, and in the last 1 year or so, from its 52-week high, it's corrected about 30-odd%. So the question is, how much of the weakness is already in the price? And Jubilant Foodworks, if you've noticed over the last many quarters, the real move comes by on the next day of the results and not on the day of the results.
Right.
On the day of the results, it's very erratic. So, it's difficult to presume that because the numbers were weak and the stock still rallied, something is amiss or not. Because on those days, a large part of it could also perhaps be pre-positioning and some sort of short covering or not. But there is an interesting bull and bear case on Jubilant Foodworks. If you just take a look at its performance versus peers, Devyani International reported an SSSG decline of 3% in the Pizza Hut chain.
Yeah.
You had Sapphire Foods, which declined in terms of SSSG by 4% in the Pizza Hut chain again. Jubilant Foodworks, in that the like-for-like growth is coming at minus 0.06%, 0.6% that is. So that means it has outperformed its peers. In that sense, while the margins have eroded, the gross margins for Jubilant Foodworks and the EBITDA margins are still higher than all the other peers that there are. So there is case for their cost efficiencies, their case for their benefit of the large scale that they operate at, and they've also brought out new prongs of growth. Popeyes is one of them. They will open 225 Domino stores in the next year as well. They still have 1,800 stores in the country right now, 20 minutes delivery that they've promised. So they're doing well. The environment isn't as conducive, and the stock has corrected about 50%. So the street believes that maybe over the next couple of quarters, the derating of this stock will completely get over, and you'll be looking at a bottom at Jubilant FoodWorks. But for that, we'll have to wait for a couple of quarters perhaps.
Right. The street view is also pretty much mixed this morning when they have given their verdict on the fourth quarter performance.
Let's put you on the spot. What's your view on the pizza of Domino's?
I like the thin crust one.
Okay.
I'm staying away from all the other junk and the
You don't
thick
like the
crust.
cheese burst, the one that oozes out of cheese?
I don't like the cheese burst.
Okay.
I personally, I like the Domino's, the thin crust one. It's one of my favorites. I still go in for that. And I was thinking of treating you to a pizza, since given the fact that I called you for ITC and I threw a question.
That's absolutely fine, so long as you don't treat me for a cigarette, because that is not something that I will
I shall not
promote,
do that.
and I don't consume that either.
Pizza for sure.
Pizza
and
on
a thin
air
crust
you've
one, because
recorded.
that's my favorite.
Perfect, let's do that. So basically my point was that the view on the street for Jubilant FoodWorks is as divergent as one's view on the Domino's pizza.
Yeah, right. That's a good point you made. With that, Mangalam, thanks a lot for taking out time and joining me on this show today. Well, let's go back to Nirav then. Nirav, what's your thought on ITC? Given the fact that, it has remained above that 400 level, do you expect it to head towards that 450 level anytime soon?
Oh yes, definitely. See, if you see the overall chart, I'll give you a little longer term structure for ITC. This stock has essentially fallen from 325 odd to about 150 during COVID, and post that, 100% retracement did take shape, and the breakout was given. So post breakout, generally what happens is you add up the number of points that it has fallen down to that breakout level. So it adds up to 200 from 325. So that gives me a target of around 500, 525 for ITC. And the 50% retracement for which has happened, but I believe it will, come up towards that 475, 500 odd levels very soon. So essentially, it is a buy. Also, looking at the indicators for ITC, I believe, they are still positive. It is still making a higher top, higher bottom formation. Volume profile is good. Open interest continues to be adding. So again, all in favor of ITC moving up. So look to buy the stock at current levels. If you get a small fall, please do add positions. 400 is a good support area that should also add up as your stop loss, and you can expect 475, 500 to come soon.
Right, so that's the view on ITC. Look to buy on dips. Let's also talk about Vedant Fashions. This stock will be in focus today, given the fact that promoters are looking to sell near about 10% stake via an OF, as the floor price has been set at 1161, which is at a discount to the current price of 1245 or thereabouts. Expect a kind of a downside on the stock in today's session. Do you think any dip would be a buying opportunity when it comes to Vedant Fashions now?
So generally, whenever such OFS or stake sale comes in, stock generally doesn't perform that well. Looking at the chart, it is still more or less a little negative at this point of time. It can probably retest its lower band around that 1120, 1130 odd levels, and then probably once this thing OFS is over, and you will see the stock coming up post that. Technically, at this time, at this point, there is no such trigger where you will see a breakout coming in. So don't look to buy the stock at this point.
Right, don't look to buy Vedant Fashions at current levels. Let's take up some more viewer queries then. This one's coming in from Satya CK, and he wants to know your thoughts on Piramal Enterprises. This stock has come off quite a bit from its 52-week highs, now trading around the 745 zone. He wants to know whether this stock will reach somewhere around 1000 level in a year or not. What are your thoughts?
Yeah, very difficult to say here, because there's, looking at the chart, a breakout is not in place. This stock is moving lower, a lower top, lower bottom formation, a channel formation where whenever it comes towards its previous bottom, up towards its previous bottom, it again witnesses selling and then makes a newer bottom from there on. So it is again coming towards its previous bottom, which was around 800 levels. That is a resistance now, and it has already started to witness selling pressure from there. Very likely you will see the stock coming lower further. The stock needs volume support or short covering action. Both of them are missing at this point of time. So I don't think one should be buying this stock at this point of time. Yes, maybe once a breakout comes above 800 on a weekly closing basis, that is when you see this stock starting to perform. But I don't see that coming very soon. So you still have to wait for that breakout to come in or lower levels to come in. Do not buy at current levels.
Right. Do not buy Piramal Enterprises at current levels. That's the thought on Piramal Enterprises. Let's take up a query that's coming in on Forgings. This one is coming in from Debu K. The company has reported a strong set of numbers. Revenues are up 20%. Margins have also come in higher at near about 18% vis-a-vis 16.9% or thereabouts. The stock has been in a steady uptrend over the last 1 month. It's heading towards its 52-week highs of 1,036 or thereabouts. How would you look at this chart now? Should one accumulate now or wait for a dip?
Looking at the chart, the last 2 years, the stock has done nothing. It has remained in range of about 1,800 on the lower end. So unless that range is broken out above, I don't think much is happening here. Even though it would post good results, this stock needs to come out of its slumber, and only way it can come out of the slumber is good volumes, a very good breakout above that 1020, 1030 odd levels, and then you see this stock perform very, very well. But such a consolidation generally takes shape for another 3 to 6 months, and probably one fall comes in. That fall can be around 700, 650 odd levels. Only then you will see buying emerge. So at this point, I'd like to not buy the stock. There are many stocks in the universe where you can make good profits with better technicals.
Right. Let's also talk about Indigo. This company is slated to report its fourth quarter earnings today. Stock has given handsome returns over the last 1 year, up 36% or thereabouts. It's rubbing shoulders with its 52-week highs as well. And once the Go First news broke out, the stock did see a very smart uptick come in. So how should one play an Indigo at the current juncture? High on the charts for this one?
See, if you look at the chart from a monthly perspective, the monthly chart is very positive. A rounding pattern breakout has come in at 2180. So definite buy at current levels. I believe one should look to add more positions here because this stock has broken out and now it can move up very aggressively towards the 2550, 2600 odd levels. So look to buy at current levels, even on some dips towards 20 to 50. 20 to 20 should be a stop loss, and on the upside around 2500 can be expected very soon.
Right, 2500 can be expected very soon when it comes to Indigo. I was just thinking of squeezing in one last query that's coming in from Vivek Kurup, and he wants to know your thoughts on Laurus Labs. He holds 300 shares and that he's bought at 331 rupees per share. He wants to know whether he should hold on to it or look at selling at the current juncture. What would you advise him to do?
Yeah. So after such a fall, there is a definite case for reversal, especially because the volumes have increased. At the lower end, you're seeing very high volumes, and there is a chance this stock can come towards 375, 380 levels. So yes, you can hold on to the stock, but with strict stop loss because this is a very high beta stock. You should keep a stop loss of around 300 or 299 for your longs. If that is broken below, just exit the counter and look for something else. But yes, there is a case for a reversal. It should come up to 370, 375, which is where you book your profits.
Right, so that's the call on Laurus Labs. With that, I think we've come to the end of the queries segment. But before I let you go, Nirav, leave us with some stock recommendations for our viewers this morning.
Yes. So the first stock is L&T Finance. I believe L&T Finance has broken out above its 5-year consolidation, retested its breakout, and now a very good rally is in place. This stock should move up towards 110, 115 levels very soon. So look to buy at current levels. 95 should be your stop loss. The second chart or second stock is Ramco Cement. I believe this stock also has broken out a rounding formation breakout on the weekly. This stock can now perform, it can move towards the 845, 850 odd level. So that should be your target. You can keep a stop loss of around 772 for your longs.
Well, those were the stock recommendations coming in from Nirav. With that, Nirav, thanks a lot for taking out time and joining us this morning and addressing all of your queries as well. Well, with that, we've come to the end of this edition of Morning Trade. But don't go anywhere because coming up next is Opening Bell. So it's a goodbye from me and the whole team that put the show together. Thanks a lot for watching.